Jonathan Schiessl as well and talk about what he's making of the market right now. Jonathan, hi, afternoon. And seems like markets definitely in the run-up to the FOMC at least have gone into kind of December end mode already. Not much action.
No, agreed. I think markets have clearly moved up in the last few weeks in anticipation of the Fed pivot. And yeah, now I guess we're just very much data dependent and in the very short term, we're just waiting for that data to come through from all the big central banks this week. So not really a great deal going on.
Yeah, right. You've got, the two big ones, or rather three big ones lined up this week. But tell me, what's the anticipation from the Fed? What kind of a commentary are they going to hint at?
Yeah, you're quite right. I think the commentary is almost going to be more important than the actual move. I think, obviously the market seems to be expecting at least 50 basis point rate rise from the Fed, but clearly the market will be obsessing about any slight changes in language in the statement just to see for any hints of this potential so-called pivot. But yeah, I mean, on the other side to that, obviously, if equity markets and risk markets in general start roaring up on the basis of a Fed pivot, I don't think that's going to play very well with the Fed either. So I think we're in for a period of volatility. Clearly inflation seems to be peaking out, but I think it's probably too early to start anticipating any rate cuts. But obviously, we're just looking to see when the top is in on the rate rises.
Sure, point taken, Jonathan, as far as the Federal Bank action is concerned. But sectorally speaking, it's IT which has been on the back foot for a while. Yes, there is a case to be made that the valuations have become attractive, but growth remains a bit of challenging factor. And now corporates like LTI Mindtree as well as HCL Tech are talking about higher furloughs. Where do you see the IT sector headed? Is it a good bet as an investment opportunity for long term, or should we wait more for a bit of a correction?
Yeah, I think you're right. I mean, whenever you've asked me about this in the past, I've always said it's good to have some exposure to the IT sector. Clearly, it gives a portfolio, will benefit from IT names when the rupee is weak. But also, obviously, there's this long-term structural story that these names are playing into. As you rightly say, it's come under a bit of pressure more recently, and so there's a bit more excitement elsewhere. So I think it's still worthwhile to have some exposure just to keep a diversified portfolio. But I guess we've got to see, if there is indeed going to be a pretty nasty recession, be it in Europe and even in the US. Yes, the IT sector does play into long-term structural investment trends, but obviously, if we see any cutback in IT spending, then that's what the market's worrying about. So yeah, I think IT is well worth having some exposure, but in the short term, it's probably going to struggle a little bit, just for a little bit longer.
Jonathan, we gotten your take on the entire IT basket, but what about your view on where banks are headed in light of the fact that now we have seen the PSU banks as well play catch up, and it looks like the Cleanup Act really has taken place within the entire sector. A lot of market experts jumping on the bandwagon and very bullish on the space as a whole, and the companies have delivered. What's your take?
Yeah, I think, again, we've talked about this space many times in the past, and it's a space which I think remains one of my favorite spaces to play India as such. Obviously, it gives you broad exposure across multiple sectors, and you have some exceptionally well-managed and good quality banks in India as well. So continue to like the space, and obviously it's in the sweet spot at the moment. RBI indicating that hopefully we're at the top of the rate rising cycle there as well. And the banks should do well from here.
Another sector as well that has been the cynosure of all eyes is the entire capital goods space, and that's largely owing to the ordering momentum picking up and a lot of initiative as well by the government on the infrastructure sector. Do you believe that this is one to look at for the long haul?
Yeah, I think it is good to have some exposure there as well. I think we've been waiting for an awfully long time for a recovery in the capex cycle in India. We haven't seen one for many, many years, a sustainable capex recovery, that is. So from time to time, the names in the sector, in the capex sector, have had their time in the sun, but it hasn't lasted very long. But I do think, hopefully this time we will see a more sustained pickup in capex. Clearly, India, to a degree, is also benefiting from supply chain realignment out of China into countries like India and Vietnam and elsewhere. So there is some benefit, let alone obviously the domestic capex requirements as well. So yes, I think it's long-term an excellent sector. The names have moved a little bit in the short term, but it is a very good place to, there are some very good names there, and would agree that exposure to the sector is a good idea.
Kept at 875.
Jonathan, what's your opinion when it comes to the entire realty pack, and especially the dominant players within the western part of the country, in specific Maharashtra? Macrotech developers, or popularly known as Lodha, is going into a sizable QIP right now, priced at about 1,022 odd rupees per share. The QIP was offered to a 4% discount as well of the current market price thereabouts, and it's a sizable fundraise that they are doing, and it's also the kind of stamp duty collections that we've been seeing on a month-on-month basis. From the COVID lows, they continue to spike at an all-time high every month almost. So just wanted to understand, what's your take on the entire realty pack?
Yeah, it's if I'm honest, we've played it once or twice in the past in some of the top quality names. It's a difficult sector, I think, to get your head around in many respects, because, as you rightly say, it's a very localized industry. What's going on in Mumbai might be completely different from what's going on in Delhi or elsewhere in the country. Clearly, Mumbai has also had its oversupply issues. So it's one which, to be honest, I hadn't focused too much on in the recent past because of all those issues, and with all the supply inventories and all these other problems the sector has. Also, some of the lesser quality names do have some corporate governance issues, which sort of have tended to keep us a little bit on the sidelines with some of the names. But I can understand, if interest rates are peaking out in India, the economy is still doing reasonably well. It's a sector which should be, a key beneficiary of the growth in the economy and the growing middle classes, et cetera, et cetera. So it should be a good sector. It's just trying to find the right names.
Yes, it is, isn't it? Jonathan, great to have you on the show. We'll let you go on that note. Good speaking with you as always.